Now that you understand the theory behind supply and demand zones, in this lesson, we're going to show you exactly how you spot these zones, how you draw them onto your charts, and basically the idea behind this supply and demand zone so that you can better understand how to trade them. So right off the bat, I think by now you should understand that demand relates to buyers, meaning that when we are at a demand zones, basically we are anticipating some buying pressure and the market to go up or start an uptrend. And then on the opposing side, we have the supply zones. In these supply zones, we're expecting sellers to take over. Basically, sellers are in control at supply zones, meaning there's a lot of sellers that are in the market and the price basically will start going down, right? Investors holding their buyers will start selling and then the market goes down. So the supply is increased at supply zones and demand is increased at demand zones, right? So to put in simple words, demand simply means that the higher the price of Nasdaq is, the less buyers will buy it because it is now at an expensive price, right? They will have to wait for it to become cheaper. But when it comes to Nasdaq, I also want to remind you to always be cautious when it comes to Nasdaq, because majority of the time investors will still buy Nasdaq no matter what price it is at. And on the other hand, there's mostly positive fundamentals that come out from the most influential companies under the Nasdaq 100. Remember, Nasdaq 100 consists of the top 100 companies. And whenever there is some positive news or fundamentals in some of the most influential companies under the Nasdaq 100 index, they will have a positive impact on the price itself, meaning that you should expect to see some bull movements, movements to the upside. So always be prepared for new highs, and also take note that price easily breaks resistance levels when it comes to Nasdaq, whilst at the same time it respects the support levels. And these support levels is where you'll be expecting to enter your trades. So remember, whenever resistance is broken and the market comes back to retest it, it basically becomes a support level, meaning that these resistance levels that are being broken through are levels that you need to be looking at for future trades that you can catch in the near future, right? When the market comes back to retest it, confirming it, a resistance broken and turned into support, right? So support levels, very key, very key, as well as they are always being respected after they have been broken as resistance levels before the retest. Now let's start off by looking at the demand zones. What exactly is a demand zone and how can we plot it, right? So as you can see with this simple illustration on your screen right now, what we're seeing here is that this is the demand zone, right? So we caught it from the previous low, and basically when the market comes back to retest that low around that area, remember a demand is basically a zone, it's not a level, right? So it's not very precise to the point. We basically have it as a zone. So when the price comes back into this zone, that is when we're expecting buyers to rise the price again when it comes back into that same area over there, right? So basically what is going on, as you can see with our second illustration over here, the low between the two highs, between these two highs over here is where a significant demand shift happened, right? So that is where we're expecting the market to come back and then give us our demand zone over there. So the demand zone will form in the low between these two highs that you're seeing over here. The second high must be higher than the first one for the demand zone to be stronger. So the higher the second high is above the first high, the stronger that demand zone becomes, meaning that you can obviously expect a huge move when the price comes back to test on that demand zone. And then moving on to the supply zone, here's a clean illustration on your screen over here. So in this example, you can see that the price is going down first, and then oppositely to the demand zone, the supply zone will be at the high in the middle of the two lows, right? So remember now in the supply zone, we are going down, right? So we have lows instead of highs. So in between these two lows is where we have a high, which will represent our supply zone area. So a supply will form at the high between these two lows over here. The high between the two lows is the place where a significant supply shift has happened, just as we said about the demand zone. But here, speaking of the lows, the second low must be lower than the first low for the supply zone to be strong. So remember, the lower it is below the first low, the stronger the supply zone will be, meaning you can expect a much more aggressive move as well. So to simplify it, a demand zone happens in the low between two highs where the second high is higher than the first high. And then for the supply zone happens in the high between two lows where the second low is lower than the first one. All you have to do is to practice it and picture it so that you can get used to this setup over here. Now, drawing your supply and demand zones. So first of all, you need to take note that trading on the charts, your supply and demand zones will never be as perfect as the one that you see in the books, right? So these are illustration examples so that you can familiarize yourself and know exactly what we're talking about what we're looking for. But also you need to keep in mind that everyone would draw these zones differently, right? And there is no right or wrong way to draw these zones. It is only there to serve as a confirmation and to give you an idea where you should look for your buy and sell entries. So as you can see over here, as we explained before with the supply zone, as you can see from our first illustration there, we should have our first high and our second high, the second high being higher than the first high, and then we look for the low, right? So that low between the two highs is where we're expecting the demand zone to come through when the price comes back to retest that level over there. Remember, it doesn't have to be at an exact price, but it's a zone, right? Meaning anywhere around that price over there, right? Now, inversely, for the supply zone, we are looking at the two lows, the second low being lower than the first one, and then that high between the two lows is the zone that we're expecting the market to come back to retest before going down, forming our supply zone. Now, always remember to combine these supply and demand zones with price action and market structure at all times, right, for more accurate setups. The setup will be more accurate if you see price is on an uptrend and it is forming higher highs and higher lows. That's when you're looking at supply. As supply zones. And remember what we said about Nasdaq is it's always on an uptrend. I'm not saying that it never sells, but it's mostly on an uptrend. So those confirmations or those setups are more stronger than sell setups. So that will make it a strong confirmation to enter buy on a Nasdaq. And also remember to take your patterns into consideration. The more confirmations on Nasdaq, the stronger and more valid the move is. Now, when you decide to enter a sell on a Nasdaq, always look to see if the price is firstly in a downtrend. Also make sure that the price is actually forming those lower highs and lower lows, which confirms a downtrend. Now, look for your M patterns, bearish flags, and also take your fundamentals into consideration. As we said, these fundamentals have huge impact on the Nasdaq, but we'll cover fundamentals in details in the next phase of the course. So to wrap up this lesson, supply and demand zones work on all time frames, so no need to worry about on which time frame to analyze. But as we said before, the bigger time frame removes all the noise and it is more sustainable and more accurate signals that we get from there. So that's it for this lesson. That's it for supply and demand zones. Next lesson, let's look at support and resistance zones.